Hello, everybody. It is Wednesday, August 14th, 2024, post CPI day. Very lackluster, no fireworks, low volume, inside move of 0.5% or so in the S&P, but it's a rise. We got a 2.9 number, first time with a two handle in a couple of years. Looks like the Fed is doing its job, and inflation was last year's problem, and you're going to get those 25 basis points cuts or maybe more September 18th. Let's take a look at what happened. But very quiet day. You'll see this might be a very short and sweet kind of a video, but let's see. So this is what happened today. Low volume trading post CPI with nat gas rallying 3%, getting closer to the level where I want to pounce on it for sure. I'm very excited about that. And we'll also look at China. China fell 2%. That's really what moved in a big way. I didn't highlight it here in the sheet, but healthcare hit a new 52-week high. The broadening is happening. If you look at the single stocks list, which I know my boy JC Peretz does, there's breadth here in this market. You're seeing all different kinds of firms too do it. And the 52-week lows are from pretty meaningless companies like Mullen Automotive and the 23andMe and stuff like that. So the economy looks like it's in a good spot. Nat gas jumping 2.9%. China dropping about 2%, 1.9 to be exact, with the Chinese internet subsector a little bit further down, 2.3%. And ARCG, the genomic biotech fund for Cathie Wood, slipped pretty hard, down 2.5%. They did buy bonds pretty aggressively today. Not massive, but rates obviously collapsed in anticipation of the Fed doing its job next month in about 4 or 5 weeks from now. And then the top gainers of the past 5 days, totally risk on, semis, tech leading the way. And then volatility dropping 31%. Wow, who could have thought and who could have predicted that? I did right here watching the videos last week. And the best trades of the past week, short vol, long SMH, and long tech. So obviously the portfolio has been doing super well since the past week because I am those things. So let's take a look. First, as usual, we will start with the Spizzle, SPY. Let's share, boopity bop. Uno momento, por favor. A little extra sweaty. I was just walking rock outside. It is pretty warm out there. Hence why he's not here. He's, I think he's dry humping the floor upstairs just out of exhaustion. Playing with his girlfriend, his little rubber ducky. Probably too TMI. Anywho, that's what we do on the show. Okay, so here was the intraday chart of the S&Ps. So here is where the number came out. Not a huge reaction. The market went from, I'm just going to round the talking round handles, but we went from 541 to 543. We hit a top at noon and came very close to topping it at the end of the session. Very, very close, like within 30 cents. So very, very tight. So it looks like there is some momentum here. All in all, though, so we are getting to, I had called out for 540 all along from about 2 weeks ago and said we were going to be there around this time. Here we are with the convergence of moving averages. Now what? I think we're going to get a little tired. I see maybe a little bit more runway to about 546 to 550. So that's about another percent or so. I wouldn't really get crazy chasing the SPY here. Some other markets could move, though. I think small caps might have a little bit of a coiled spring to it. And this settles here. One of the things that does concern me a little bit, not a ton, but because it's holding a 200-day moving average, very nice. But I don't want this to be ancient history. These July 16th all-time highs of 565 in the SPY. Basically, what I mean by that is I think we're going to top around, like I said, 546, 550, and then we're going to oscillate right around probably a small sell-off, like 2% or so to that 540 level again, and then we'll ramp up to new highs. So that would take you to, mid-September for the new all-time high. So a little bit off on my Labor Day prediction, but pretty close. All right, and you have beautiful support there with the rise of 200-day at 503, which even at that scare when the world was ending last Monday with the Japan sell-off, it held it wonderfully. All right, so let's get to what moved today and why are we talking about it. Okay, so UNG, oh, my favorite. UNG, I would love for it to get to 1837 because that's just a really high conviction sell. It's been doing that even at highs. It's just been a sale going back to last summer, right? So that would be wonderful. I don't think you're going to get that set up. What I think is more likely is This could go a little bit further. I think 15.5 is going to be the most. It was up 2.8% today. Pretty much the only multiple sigma mover. This denotes a 52-week low. It's actually an all-time low for UNG. So to me, this seems still super heavy. I think this gets to 15.5. You probably need a little bit of a vol expansion for that. And then, like I said, I would love to get it to 1835. I would be immediately buying September put spreads on it, and maybe October as well. But I don't think it's going to be that easy. I think this gets to maybe 15.5, and then I'm going to have to make a decision, which I will in the next week. So that was the only thing that was up big today. So if you said, post CPI, a good number, a cool number, what are they buying? It was not gas. So I don't know, pretty much kind of confirms broadening to me in digestion. When we had 3 of these reports, these videos, and there was nothing in a multiple sigma down move, it's the market digesting it. All right. Let's take a look at China. I talked about this 2 days ago, and I said I don't like this asset. China from the long or the short side, I think is just going to be kind of stuck here. Had a kind of a big move down here, down almost 2%. So I think this was the top. I think that was a nice run ahead from its 200-day moving average, which is just flat, dead weight at 24.96. It actually is slowly descending, but it's pretty much stuck at 24.96. Its 52-week high back in May. Pretty wild to think about it. I do like the support it has at 24.96. It might buck a little bit, but seems pretty decent. All that being said, I do think this was the local top that it put in at around 25.82. And now what I do see a small sell-off, a correction down to about 24.65. So like right inside, probably aggravate some people and give up the 200-day moving average and do this tug of war. You just see lower highs, not the best security to get long in. So I think that was the top, and then we'll start to go a little bit lower over the next 3 weeks or so. A move from 25.32 to 24.64 is about 65 cents. So about less than 3%. So a big move today lower though. Let's look at KWeb. If there's a little bit more meat on that bone in terms of a trad. So similar, I see the top was here, pretty equal levels here actually. So 26.76 looks like it was the peak, down 2.3% today. You are getting a little bit, I'm looking at a different time frame chart, a little bit of the volume expansion here. I know it looks like it's tightening. The blue waves here, the Bollinger Bands, but also you see easily lower highs here. This one wasn't looking too bad back in May with its 52-week highs, and this has just been a staunch. The 200-day moving average is 26.99. We'll call 27. So it's $1 below it now. Giving up the ghost there. So for the next 3 weeks, I see this going to 25.15 or a reduction of about 85 cents. So about almost 3% or so. All right, and then ARCG. Again, I always like to put things in frame, and like I said, I think the spot in the overall market is kind of almost done. It's rebound, right? So as I say, nat gas almost done, getting ready to short it. FXI headed lower, KWeb headed lower. It helps to put together a thesis across the globe, right? Across different securities. Let's look at ARCG, which used to be my favorite short because it's such a piece of crap. Today down, 2.5%, pretty hard. I don't. This was the low, I think, when it had the Japan scare. I don't think this is a great short candidate here. I think this is actually might be a part of the market where people, try and expand portfolios potentially. So I actually see this potentially rallying just shy of its 200-day moving average and getting to about 27. Did I look at that right? Uno momento, por favor. Yep, about 27. So just shy where my cursor is here over the next 2 weeks or so. And a move from here to 27 is $2.50. That's exactly 10%. So it could be nice if you want to go in the face. I might put this on. I never go long on this security, but that makes for a frustrated trader, you shouldn't do that. I really don't counter trade, but this might be a candidate. I'm not sure, but I'm not calling for a massive. 10% in this is, the ATR or average true range is $1 on this, which means it moves $1 low to high on average per day in one session for the past 3 weeks. So yeah, I think it's going to do similar to what we want to have in nat gas, a beautiful tag of the 200-day. You see it's basically lived there from July 16th to August 2nd. And this thing has essentially remained under its 200-day moving average with gusto since March. So I think that trend is going to continue, but I do think it's going to try and flirt and then move lower. So that's ARKG. All right, top 5 gainers of the past 5 days, no repeats in charts. The SMH, the key to the market, in my opinion, is the best gainer over the past week, up 11% or 2% or so per day. Love to see that. We called this out with the Japan crash, and I said this is very rare. I don't think this is a trend change and the end of the largest adoption since the internet and PC. Okay, so I didn't think that was over because Japan raised 25 bips. Grow up. And emergency rate cuts. People are a joke. Anyway, so what did it do? I bought here, and it's been a beautiful buy. And now what? Okay, this is getting a little bit tired. I think it might, if it has a little bit more gusto. I know Cisco's reporting, I believe, right now. It could power this a little bit, but I see this potentially getting to 250, but that's the most aggressive target. I think it did its job coming from 200 to 236 in a week. Okay, so I mean 11% in the past week alone. So looks good. Maybe it gets to 250, but I that's a higher target. I think it's going to, as you can see today, it was up just 10 bips. Maybe 242 to 250 range. I wouldn't hold out for much more, especially the candle today doesn't show a lot of bullishness. But beautiful chart. I would buy on the next leg lower, which is probably end of the month for this. Let's look at the broader tech index, or the XLK, the second best gainer. Love that. So it's telling you that in terms of dispersion trading, the alpha is coming from semiconductors, providing 11% in the past week, and then the broader index up 8.5%. I know Apple, for example, has had a monster rally since the Japan news last week, and that's a major constituent of XLK. This is basically the Apple Microsoft fund. It looks a little done here, though. Again, I didn't think this was going to stay here. This was like pickup of the year if you were able to buy tech here, which I did. You had 3 chances below the 200-day moving average. That's just flashing lights. I am getting a data a note, an alert from my data provider that I use that had an overbought sell. I'm not going to get into the math of why, but basically it's because it's above the 21-day exponential moving average, but it's below a longer-term moving average. I believe they're referring to like the 3-month, and it's looking a little tired. Up 0.5% today, not bad. All that being said, if it has another gusto, 220 maybe. So $5, which would be 2%, but not much more than that. All right. And there is some broadening happening. So they're not just buying semis and tech since the Japan news. I feel like I said it 10 times now, referring that. But gold miners up 8%, the juniors in the past week, down 0.5% today. Let's see if there's any trade on this. So again, just going back to putting together a thesis, right, and not being biased at all. Said nat gas kind of done, ran up enough, and that's coming to resistance. China looks like it's going to be headed lower, as is KWeb, and then maybe ARKG is actually is going to start running. Semi's looking a little bit tired, maybe another 1% or 2. Same thing for tech. It gives me that all together idea that the market's getting a little bit tired, and that was it very soon. And this isn't astrology. Literally called for 5,400 in the S&Ps, I think 2 weeks ago. So let's take a look at gold miner juniors, which isn't super correlated to semis and tech. This looks like it has a little bit more to go. I would say like 46.25. So it's funny. I was doing it calculated using another graph, and it comes in to be like right inside the Bollinger Band. You see this tightening too. So you're getting a little bit of vol compression, not expansion. So 46.25, that would still be a nice runner. That would be not a bad gain of almost $2 or so. So maybe. So it's interesting. I'm getting different ideas to go into some different securities, like going long ARKG and going long gold miners. Those are trades I haven't had in quite a while. And this chart actually looks particularly strong. I like the rising 200-day moving average. I like that the top was just inside of the past 4 weeks and that we're a rock throw away from it. I might have to consider this. Down 0.5% today. I will take a closer look. Maybe not this go around. Well, actually, you know what? Hang on. I will do something real fast. Should we rally to 46.5? That's a gain of 4%. Yeah, that's not super wonderful. I have to look at the options. I don't think that's going to be a great candidate. All right, EWT, I would tell you if it was. Taiwan, really strong, up 8%, so almost just as much as the gold miners. Let's take a look at if there's anything here, because we discussed what's going on with China. Yeah, this looks a little tired. This looks like it did its job. My God, going from 45 to 52. That's $7 in a week and a half. You got to give credit where credit's due, and trees don't grow to the sky. This might go to 54, but like absolute tops. And you'll find that out this week. Otherwise, I think this wants to spend a little bit more time around 52. All right. And then lastly, EWZ. This has been really astonishing to watch. Brazil up 8% in the past week. Look at this. You don't see this all the time. From 52-week lows, and we talked about this 2 weeks ago. So I'm going to put my finger at you. That's my Mick Jagger impression. We said this could be a runner, and look what happened. 52-week lows. I wish I traded. I didn't trade it directly. I did some other emerging market stuff. But this goes from 26 to 30. That's 4 points, far greater than 10% in just a week and a half. So this was, who would have thought, when the Japan stuff happened, the pickup was Brazil. You would have crushed it. So you go from the outside lower band, below the lower band, to the upper band. That does not happen usually. So it's all about going forward. Now what? This looks a little overdone. It was flat today. Signals to me at the end of this run. Again, kind of reminds me of SPY. This should not have honestly surpassed much more than 29.5. I appreciate that it's trying to make a run to its 200-day moving average. I don't think it's going to do that. I think it's getting a little bit tired, and this is going to go to first stop 29.5. So a reduction of about clean 50 cents or 1.5%. And then I think it's going to spend some time around 28.5. All right, so down days in Brazil's future. And then got to look at VXX. Why? Because this is astonishing. I don't know if you noticed in the sheet, I usually have top 5 losers of the past 5 days. There's only one loser that is down to more than 1% in ETF land, and it's VXX. I'll say that again. In the past 5 days, there's only one loser in ETF land more than 1%, and it's by 31%, and it's VXX. So totally risk on, exactly as predicted. See VXX in the bottom quadrant being the worst, the just biggest loser. And then what's on the other side, the biggest winner? Semis and tech. So that's exactly what you want to see. That was just a scare, the correction you needed. Even referenced it in the videos about 3 weeks ago, saying we're a little bit overdone. The correction is going to feel like it's going to hurt, and then it's going to come back. You're going to have one of those crazy up 6% NVIDIA, up 5%, XSD semiconductor ETF days. It's exactly what happened. So got to give myself props, honestly. I know you guys probably hate it. But trading is hard. So when you get it right, you got to, appreciate. So now what for VXX? Because this is a good call by me. You notice its 52-week low was July 12th. Had to split due to just being such a piece of crap on July 24th. And then they had that nasty candle with the Japan stuff August 5th. And that's been going down ever since. The actual high was 91, and we're at 47. I think I was calling for almost a 50% reduction in volatility. I don't know if people would have called me crazy, but it's kind of exactly what we got. Now what? And it bucked exactly what I said. I didn't think this was a trend change. The same way the semis was underneath and tech was underneath its 200-day moving average for just, a spit in time. Is that a phrase? The same thing here. They couldn't do it for a week. It was above its 200-day moving average for 1, 2, 3, 4, 5, and then it closed underneath it. So 1 week of sessions where the fear was in the markets. Please. Now what? So I think a little bit more to go. Let me see. This is tough because it has fell a lot, and now it's starting to slow down. Today it was down. It's still, again, a pretty monster 6.5%, down 30%, I want to say, over the past 5 days for an average of 6%. So it's still not really bucking in that regard. If I saw this down, 10 bips, 1%, I'd say, okay, the end is near. But I still think this is going lower. And of course, the market takes a huge sigh of relief after the CPI, which is probably a big contribution of this being down 6% today, 6.5%. But now what? So it's such a big range because of the gap that it had, but I see it going, well, sub 46 is still my call. Today it's trading at a 47 handle. I would say sub that. And you got to appreciate, so the adjusted 52-week low, because the split is 40. It's 39.98. We'll call it 40. So basically, I will say 23, 12. Yeah, I'm looking at 34 over the next week or so. It's a little bit aggressive. I should probably just call. I probably shouldn't put my balls on the line like that. The 52-week low is 40. I'll just call for new 52-week low in VXX. My target is probably closer to 34, but I think it might run out of time. But the good thing is with VXX, even it's not going to just hold and be, right around here. It's going to cascade lower. Okay. So yeah, my call is for new 52-week low in VXX by today's Wednesday, probably by next Wednesday. Alrighty. Best 3 absolute trades of the past 5 days. Short this piece of crapola. Okay. Considering 5 days ago, technically the week session was here. Yeah, the thing was trading at 72. That was no brainer to sell calls, buy puts, what have you. And then if you want to get long, go the other way. You buy SMH, buy XLK, best trades in the market. And if you don't want to have that concentration in technology, you could have bought the junior gold miners. Next show, I will see. I might have to do a show tomorrow because I will actually be in New York City. Let me, did I have that right? No. We will have a show on Friday. I'll actually be in New York tomorrow. All right. That is all. And peace.